So welcome everyone to another episode of Around the Block Talk. Today we have with us Harman Puri. So he has spent several years in the space of blockchain and led several projects. And he's currently the director at BlockTing. And we are very excited to hear what you have for us today, Harman. And I'll hand it over to you. Thank you.
Great, thank you. Glad to be here. So I'll just cover a very brief about blockchain and fintech and supply chain overall, because I'll leave more room for question and answers and people who can ask and get more details otherwise. So okay, I'll just continue. So fintech and supply chain, they are the most you can say obvious fields where blockchain is required. Basically, there are a few key factors which blockchain enables. For example, trust, transparency, security, all of the keywords that we hear every now and then. And fintech and supply chain are the two industries which are in a desperate need for these kind of characteristics, or you can say enhancements. So if you take a very normal example, in your everyday banking services, you do not understand why you are being charged a fee and for what the fee is, right? So there's a lot of gap in terms of transparency why a bank is charging some particular amount of fee on your transactions or on your loans or savings and everything, right? If you are getting 5% on your savings in a bank account as an FD, and you are getting 15 or 20% or even more in a DeFi protocol, that makes you wonder why banks are giving you less and how DeFi can give you more, right? So that's where this transparency factor kicks in. Then secondly, after the all fiasco of Punjab National Bank's internal fraud going on and Yes Bank's scenario in India, so the security of banking sector and the monopoly of the banking sector, that's something that has been highlighted a lot in the past. Therefore, the possible solution forward is the inclusion of a good technological concept, which in this case becomes blockchain. Similarly, for supply chain, if you think about your everyday produce, right? If you think about the new concept, organic food that's been going on, what's the reason behind organic food? Because people have lost trust in the normal food that they eat. Why? Because there are too many people in between. The food comes from farmers to someone else, then from someone else to a producer, distributor, then distributor to accumulator, right? Then a shopkeeper, and then to your home. So in between, there is a lot of room for fraud, or you can say mixtures. So what supply chain also needs is a system where we can track and trace each and every, even a smaller grain. Okay, so the need for blockchain in these areas are very evident from the current scenarios. I'll just dive into what blockchain provides, how blockchain is enabling enhancements in these areas, and what are the key factors. So overall, if we divide, there are 6 key factors that blockchain brings to the table. So if we start with the left one, liquidity. So right now, what happens is, let's take a very simple example of a farmer in a supply chain. So if a farmer sells his produce, he gets the payment almost 3 to 6 months from that time. As a farmer, when you are growing food and you are selling it in the market, you get the end result from the government after 3 to 6 months. So your payment is on hold for 3 to 6 months, because once the government completes the whole process, which is a very paper-based, extensive process, once the whole process is completed, only then the payment is released. And that also takes a lot of time. So when we implement blockchain in a supply chain sector, this component of farmers is taken care of very easily. When the farmers sell their produce without any paperwork, without any extensive requirement of intermediaries, what happens is that a few smart contracts or a piece of code or technology, it automatically enables the transfer of funds. So in a nutshell, the manual process is replaced by a code, a pre-written code, or a few pre-written lines of code which are self-executing. Upon the successful execution of a few conditions, they automatically fund the account of the farmers with the required amount. And this is just one example. In the whole supply chain, there are several characters involved. For example, let's say even the warehouse manager, right? So for the warehouse manager, it happens a lot that the produce gets spoiled in between. And the insurance company that takes care of the produce, they do not provide the required liquidity on time. So overall, the liquidity factor taken care by blockchain depends upon two factors. Number one, the smart contracts, and number two, the digital payments. So smart contracts is the one that we just discussed, that upon the successful execution of a few protocols or a few conditions, the funds are automatically deducted or added accordingly. Now the digital payments part is that blockchain enables the transfer of value on top of internet. So digital transfer of value is what blockchain enables. When you hear the words Bitcoin and cryptocurrencies, they are nothing more than you can say a few bits of data that represent a transfer of value, right? Similar to your original notes. If you have a currency in your hand right now, if you have a 10 rupee note, that 10 rupee note has a value because the government has defined it as a 10 rupee note. Otherwise, it's just a piece of paper. Similarly, there are certain rules and regulations behind defining a cryptocurrency and defining its value, which we'll not be getting into. But overall, when you transfer that particular currency on top of a blockchain, it represents a transfer of value, which can be used for exchange. Moving to the next part, traceability. So blockchain basically maintains a ledger. So by ledger, it means a complete record. So record of what? All the transactions that happen in the network. So in any typical supply chain or fintech model, if you think about all the transactions, right? For example, if you submit your account statement for the income tax returns, right? In your account statement, you get the whole details, how you have been doing transactions in the past financial year, what has been the credit amount and the debit amount, and based on that, you pay taxes, right? So basically, you are able to track each and every transaction that you are doing. But implement this on your daily life. What if you want to track each and every activity that you do, right? What if you want to track maybe how you have bought something, what you have consumed in a day, when you consume that, and you want to maintain that data. So when you are on a blockchain, all of this data is also maintained. But the major part is that this data is secured. So when you get your account statement from a bank, what happens is that you are depending on a third party. Obviously, a bank is not going to change specifically your account statement. But if a bank changes the account statement of a person, that's not that difficult for a bank, right? Any bank can do that. Similarly, when you think of a very small scale, maybe change, for example, a personal loan that you gave to a friend. Now, if you do not have any paper record or data of the loan being given to the friend, you are in a great trouble. For example, I give 100 rupees to a friend named Raj, and Raj tomorrow says that, no, Harman, you didn't give me 100 rupees, right? So in a nutshell, what we do there is that we share resources on the base of trust. Now, these kind of small scale transactions, they can also be put on blockchain, wherein if I send 100 rupees to Raj, it can be embedded in a smart contract that I have shared 100 rupees and Raj has to give me 100 rupees back at a particular date and time. And that becomes more enforceable, which can be used later on to validate our transaction as well. So not going into much depth, blockchain is a decentralized distributed ledger, which means that it maintains a record which cannot be altered by anyone. And that record enables a trust in the whole network. So if you think of a small group in a college that is doing some activities, you are collecting money, you are funding some event, or you are going for a party, and imagine that the whole country is doing that. Imagine everyone in the country, like all 1.3 billion people, everyone is doing a contribution for a party. How do you keep track of that? Who do you trust to keep track of that? Everyone will have some bad intentions. You cannot trust a third party. So that is where you trust the code. And similarly, for a space like fintech and supply chain, trust becomes a very key factor. Then third is the automation of smart contracts. So as we just heard that, for example, a farmer sells his produce and gets the payment after 3 to 6 months. Why? Because all of the manual process is involved. The farmer sends the produce to someone, he validates, verifies, then sends to someone else. Then the produce gets to the transporter, it gets transported to the warehouse. Then warehouse confirms, and then the government release the payment. So all in all, the process takes 3 to 6 months, and the farmer is sitting idle for 3 to 6 months. However, when we have smart contracts in the picture, all of this can be automated. Just on the first step that farmer has sold his produce, the government's fund should be released to the farmer directly. Similarly, for any other supply chain, for example, a medical supply chain, if you go to a hospital and you have a medical insurance in place and you are getting a checkup done, the process of getting that insurance in place becomes very difficult. They take a lot of time in verifying each and every detail, especially when you miss out on maybe contacting the insurance person in the initial stages. So in that case as well, smart contracts can automate each and every action. So supply chain here is not only for the food, but for every industry. If we think about it, even the laptops that we use for a call, for a Zoom call, even they are a part of a supply chain, which is a separate supply chain. How the parts are accumulated, created, and then sold at a particular pace. And in every supply chain, the manual process can be easily replaced by smart contracts, allowing the supply chain to be much more efficient. Then the fourth part is provenance. Provenance is basically the auditability of the whole ecosystem. Just as an example that we heard right now, that I gave 100 rupees to Raj and then he sent 100 rupees back to me. So the record of the transactions which is kept becomes the auditable record on blockchain. For example, we had a third friend named Ramesh. So Ramesh was a witness that I sent 100 rupees to Raj and Raj has to return. But tomorrow if Raj kind of like talks to Ramesh, we will keep it 50-50. You don't confirm that I have to return 100 rupees. That can also be a situation, right? Which means that a third party in an ecosystem can be manipulated. Ramesh is basically open for manipulation, whoever gives him the higher amount. And this is what we experience in our everyday life in every situation. But when you put each and every record on a blockchain, what happens is that neither me nor Ramesh nor Raj, no one can change that. Why? Because on blockchain, a single record of transactions is shared with multiple parties. So it's like the record of me giving 100 rupees to Raj is sent to 1000 people across the globe. No one knows those 1000 people, but everyone has a record of that. So tomorrow, if Raj says that, no, I don't have to return your 100 rupees, I can take reference from any of those 1000 people that we gave you an initial record of me sending the 100 rupees and you are the witness. So please help me get my 100 rupees back. So basically, blockchain enables a transaction to have multiple copies and exist on multiple systems at the same time, which enables a auditable record. Fifth part, integrity. So obviously, when you maintain a complete record of transactions with multiple parties, the whole ecosystem becomes very integral. So since there is no possibility of manipulation, everyone stays true to their word. If Raj knows that he cannot disagree to me giving 100 rupees to him, then Raj will stay loyal to the whole ecosystem. He will stay honest. Why? Because he knows that if he refuses to pay 100 rupees, then there are 1000 people on the network who know that the transaction took place. He cannot lie. So overall, the integrity of the system is maintained. And then finally, the sixth point, security and data privacy. So this is a more of a technical point, how blockchain is maintained, how records are added to a blockchain. But overall, if we just understand, Blockchain uses a certain degree of hashes and encryption and decryption techniques, which allows the data to be very secured. No one can change the data, not just because of a long record or a distributed record, but because of some other reason as well, right? So there's a more technical side to it, how hash codes are maintained and how blocks are linked in a blockchain. But overall, if we just understand from a 30,000 feet view, the data in blockchain can never be hacked. It can never be changed. It is there for the lifetime. As long as the blockchain exists, the data on the blockchain will remain there, right? So do we have, okay. So we have Dhruv and Krishna also with me on the call. So this is just a very basic introduction to blockchain that I had given the time that we had. What I would like to do next is maybe show a financial application, how it's working on blockchain and how it's not at all different from your traditional application, but still you can use it in everyday life, right? With enhanced security and liquidity and traceability and all of these factors. So maybe Dhruv, Krishna, whoever of you is on laptop, please share screen and maybe show a small demo of Cash as a platform, how you can send money from one account to another using Cash.
Yes. So, like as we can see, this is the Cash app which we were seeing, and we are getting right now 18% of variable earnings on our savings account. So this 18% we are getting through the Anchor protocol, and the Anchor protocol is like built on Terra, and Terra is a crypto project in itself, and as you all know, cryptocurrency that works on the blockchain technology. So I'll just log in. Yep. So we have logged in, and so like right now, Cash is using Taurus as a validator, and so I just clicked the login and account button, and it logged me in. So when you make an account on Cash, you don't have to, create a separate wallet. Taurus is and Cash, they are providing a system in itself that will make the accounts for you. So here we can see my Terra wallet address and my Ethereum wallet address. So yep. So I have shared my Terra wallet address, and yep. So like move further, we have a checking account, we have a saving account, and then we have investments. So right now, like as I haven't done any investment, but on Cash you can invest as well, and this happens through the mirror protocol, which is right on Terra, and these are synthetic assets. So these assets are on the blockchain, and you can, as you can see, like the stock for AMD, it's denoted as MAMD. So that's like on the mirror protocol. It's a synthetic asset. So that's it. And if I reload my Cash right now,
Basically, what you see in front of you is that a simple financial application that you use in your daily life, right? If you open any bank account services on website, you see that okay, you can deposit, transfer funds, and earn savings, open FD, and do different stuff, or even invest in mutual funds that many banks are offering right now. So similarly, that you see, a blockchain-based application is no different. So the biggest difference that you get here is that you get to be a part of a decentralized network, which enables you to kind of like get exposure to the best services. So in a normal bank transaction, if you send a transaction from your house to, let's say, someone in USA, right? So it will charge a very hefty amount of fee. But at the same time, this is not asking for your nationality. This is not asking for your currency. It is just asking for a simple wallet address. If Dhruv was sitting in Canada right now and I am sitting in India right now, he can send me money directly on cash without any hefty charges, without even a smaller charge, right? Without charge at all. So you can see that Dhruv's balance now shows $5, which were sent in just 1 minute through just a simple wallet ID that he just shared on in chat, right? So it takes almost 1 minute to not even 1 minute, 10 seconds, 15 seconds to process a transaction. And it becomes very easy to send money globally as well without any restrictions. So, yes, Dhruv, you may continue if you want to share any other details.
Yeah. So like right now I can show like we transfer our money from checking to savings account. So like in cash also, which is a decentralized app, we can do that. So I'll just yep. 5 USD to savings. Yep. Okay. So it's not allowing me to do 5 USD because there is a network fee associated when you are moving your money from checking to savings account. So I'll do 4.
So there is a limit in what you can send from checking to savings. It won't work with this much since you have to maintain $5 balance in cash as well, in the savings as well. So anyway, the example that is being shown on the screen is that how easy it is to use a blockchain based application. It is not at all what the hype says. People say that cryptocurrencies are very complex and it is very difficult to use, but in reality, it's just the right platform that you should have, which you can use. For example, here, if you have $5 in your balance, you are getting 18% interest on that. So imagine that when you put 1 lakh rupees in your bank account, after 1 year, you get 5,000 rupees as an interest, which is lesser than the inflation rate. So your 1 lakh 5,000 will be worth less than what your 1 lakh is worth right now after 1 year, right? And similarly, if you put that 1 lakh in cash, you will get 1 lakh 18,000. Or in any other DeFi protocol. Cash is just one example. You take any other DeFi protocol. Dhruv, if you can open Aave, just face like homepage of Aave.
Yes, sir.
Just a quick question from you here. So, are we moving fiat money through cash? And so, does it require a KYC? If I have to convert my fiat money and put it on cash, then move it around.
Yes.
So,
Again, yes. A very interesting question. See, the thing is that many people do not understand the difference between fiat and crypto right now, right? They think that everything in crypto is volatile and they should be handling fiat only. But what they do not understand is that there is a version of crypto which is stable as well, which is stable coins. So for applications like Cash and Aave and other DeFi protocols, the everyday transaction that you can do is through stable coins. So you can think of stable coins as a middle ground between fiat and crypto. So if we have Indian rupees in our pocket right now, and if we want to send a digital, decentralized platform transaction using those Indian rupees, we would have to convert those Indian rupees into a Indian rupee stable coin. Okay.
Right.
This is a part where users get a little bit confused, which is why there is a separate service called on-ramps. So without going into much detail, I'll just give a very brief explanation. Dhruv, if you open Cash only.
Yes, sir.
On Cash, you can go on deposit.
Yep.
Yes. So you see here in deposit, there's an option of bank account or card, right? So basically what this does is that you deposit your money from your bank account and the platform automatically converts it into stablecoin version and then allows you to do the transactions with those versions.
As I'm able to understand, so my fiat get converted into stablecoin, then get transferred to another wallet within Cash as stablecoin, and so the receiver, how can then they convert it back into fiat?
So if they want to convert it back into fiat, so Cash doesn't only allow to send to cash, But basically, sorry, it might get confusing. So it's not just between the accounts on this platform only, but it's between other accounts as like other wallets. For example, the MetaMask wallet that Dhruv just opened. You can send your stable coins to the MetaMask wallet. You can send it to your Binance wallet. And Binance is something that everyone is using right now. And then you can sell it on Binance to get fiat money in your account right away. So basically, it's a very highly liquid kind of thing. Even if you have $10,000 or maybe even 100,000 or even $1 million in your cash account, you can get the equivalent value in fiat in your bank accounts in maybe a matter of 4 or 5 minutes maximum.
Right, sure. And you also showed us investment within cash, so you can invest in stocks of various firms. So,
yes.
So how is that bridge being gathered? So we can directly invest crypto and stable coins and buy stocks of these companies, or are they also some representation or
Yes, absolutely. So again, there's a little bit of technical side, but I'll just explain it in a very simple language. So again, for this, there is a separate protocol which has been integrated, which is Mirror, as Dhruv explained. So what happens is that the Mirror protocol buys some stocks, right? Then it represents those stocks as cryptocurrencies, as tokens, right? And then those tokens you can buy. So basically what you are buying here represents stocks in a real life.
Okay. Right. So we are buying those tokens which are tagged to the stocks, which represent stocks.
That's correct. And this also allows you to, like, for example, Dhruv just opened his account. He's sitting in India right now. He's in Mumbai. So if anyone of the audience is in Mumbai, do meet him for any crypto related queries. So Dhruv is sitting in Mumbai and he can buy these stocks. So buying an Apple stock in US, it usually requires a very extensive step, right? Here you can buy it easily.
Right. But how do you ensure that, these tokens which are pegged to the stocks, these are as valuable as the stock itself? Because I feel that the company might not recognize these tokens as stocks, as their own stocks. But how do you bridge that gap from stocks to these coins?
Okay, so basically that's the concept of synthetic assets. How synthetic assets are represented on top of a blockchain network. There are multiple ways. Very common way is that there is a custodian. So custodian is a company which is authorized by the government as well, which takes stocks in their portfolio and then convert them into tokens. So basically they maintain the ownership of stocks through tokens as well. That's one way. Then there's other way where the stocks are directly represented as tokens, but the buying and selling of stocks, it is maintained again by a custodian only. So overall, conversion of stocks into tokens can be direct and indirect as well. In Mirror's case, I think it's indirect because it's representing stocks that, for example, the Facebook stock is being represented as MFB, Mirror Facebook, right? So which means that Mirror has issued a Facebook stock on its protocol, which means that if you are buying Facebook stock on Mirror, then Mirror is buying Facebook stock on your behalf in the real life. Then when you sell Facebook stock, Mirror is selling Facebook stock in the real life. And you are getting the amount of money more or less where whatever happens.
Right. So, although this is decentralized, but we do have to trust Mirror at the end of the day to bridge that gap.
Yes, in this specific protocol, we have to trust Mirror. Otherwise, when you talk about savings or checkings, there you only have to trust smart contracts. So again, decentralization is kind of like available at a certain places, not available at a certain places. But there is still a degree of decentralization. For example, in Mirror also, you are buying and selling the stocks through smart contracts on Mirror. It's Mirror's responsibility to buy and sell the stocks in real life as well. What you will get is assured payments. They cannot hold your payments in a sense.
Sure. Understood. Yeah, you can proceed.
Sure. So that was the overall idea of how blockchain in fintech can be a really good source of evolution of fintech and allow us better financial services. If there are more questions from the audience or anyone else, please let me know.
Just out of curiosity, one question that I would like to ask is: have you tried crypto arbitrage? Because there is usually a price difference between different countries. Then you can move the difference through applications like cash through stable coins. So, what are your views on that? Does that work?
Yes, see, it's just like your traditional stock market as well. So if you have seen the movie, like the series that I think we all have seen about the 1991 scam, right? So we know that there's always a loophole that can be exploited. There are certain protocols which are keeping very advanced measures to ensure that arbitrage is not happening. So the reason why arbitrage happens is the difference in terms of oracles. Oracles in blockchains are the system that provide prices, update prices on every second or millisecond basis. But there is a very high possibility that one protocol might show the rates lesser than the other protocol, and you can buy and sell to get the profit accordingly. People do arbitrage every day, all the time. Obviously, it's risky. There are risks involved, but that is where we say that blockchain is still in a nascent stage. It's still an evolving industry. It is offering a lot, so it will take some time to adjust and accommodate all and all features accordingly.
Sir, I would like to add to that. Like, I have myself arbitraged to one or two times, and like this is a real life example of how it was done. So, like we all know, when in India, when there were a lot of discussions about cryptocurrency getting banned and all that, and at a point there was a rumor that the crypto is going to be banned. So the Indian crypto exchange, that's the WazirX, it the WazirX, the token WazirX, it got tanked. So it went down by let's say 20 to 30%. Then all the in that particular exchange, WazirX exchange, every crypto got down. So what I did was I bought more of them in WazirX. Then my WazirX it is automatically connected to the Binance account, because WazirX is owned by Binance, but WazirX is for the Indian users. Then I shifted my the tokens from WazirX to Binance without a fee, because the transfer charge in WazirX to Binance is zero, as they are owned by the same company. Then in Binance, I sold it, and I did it a couple of times. But I think Binance, like many people were doing this, and so Binance, they just stopped the transfers. But yeah, like that's a real life scenario where I actually arbitraged.
At the same time, many people also arbitrage USDT. So they
Yep.
transfer USDT from WazirX to Binance and they sold it for using P2P transaction.
Sure. So I believe it works in certain cases, but there's no fixed route to it.
Yeah.
Most of the times the gas fee is high, so it is not advisable to go in for arbitrage. But there are certain conditions where the difference is quite large comparatively. That time you can go in for arbitrage.
Yeah, and for another example, if I say like in Coinbase and in Binance, the prices are different, and if we buy in more quantity, it will be a considerable amount of difference between those between the cryptos that we bought. But and getting them out of Coinbase, there is no limit. But when you get them in Binance and when you sell it, the fee is automatically adjusted, and when you sell it, you will see the same amount of money that you bought it. You will get the same amount of money that you bought in Coinbase. So like in these scenario where everything is going fine, I don't like arbitrage. It can be done, but again the profitability of this is like zero to very less. But yes, in some scenarios like where the WazirX crypto exchange, it just got down, then some good profit was made.
Sure. Thank you. So, apart from that, is this particular project that you showed cash? So, are you guys working on this project, or is this something that you use regularly?
No, it's basically one of our previous clients, but yes, so we found it very interesting. So we always share what's going on in the market, and it's great.
Okay, that's great. So, what kind of work does your firm do, and uh, how do you work with these clients?
So we are basically into the development and marketing space. We have been developing blockchain applications for almost 3 years and marketing projects for almost the past 1 year, offering a full suite of services.
Okay, great. And how do you see the market today for a firm which is developed, which is a firm like yours, which is giving these services? Are there a lot of clients available, or how is the market responding?
Yeah, absolutely. See, this space is growing tremendously, right? Uh, like getting clients in this space is not at all a big deal, but maintaining the quality or doing the right work is what matters according to us. That's what our vision is. We have seen many firms grow exponentially in a very short period of time, but at the same time gain very bad image as well in the market, right? And similarly, there have been firms that have grown in uh, 3 years or 4 years time, but have maintained a very sustainable business case, right? So okay, okay, sorry, I was thinking that I am offline, but it's through screen that's showing you are online. Okay, so basically what I'm trying to say is that uh, the space is very accommodating, very opportunities are endless, but you have to understand what kind of work you want to do, what kind of image you want to maintain, what is a sustainable approach.
Right, sure. And so, particularly for a nation like India, what role do you see India playing in this entire blockchain ecosystem and Web3, and what is the space that we have in there?
See, India is obviously always been on the front of service-based industry, right? The reason why most of the quality products have been outside of India previously is because of this strict regulations, which we are experiencing right away as well. Still, many Indian startups have started creating some good products, and India is regaining its position in the overall market. But eventually, in the Web3 space, like India remains at top in terms of providing the developers and marketers. It remains as the number one country right now. People say that okay, Russia has more developers or Ukraine has more developers, but there's no quality at all, which is why Indian developers have grown a lot. Even recently, I saw this post that salaries in India are no more just the normal MNC salaries. People who are doing actual work, they are getting more salaries than a US based developer or a person working in US, right? So this is because of the Web3 space, how Web3 is growing. So with the growth of Web3, opportunities in India are growing a lot as well. The only requirement is to have the right kind of knowledge and education and the experience, obviously. But yeah, opportunities are growing tremendously.
Sure, that's great. One gap that I see in the blockchain in the Web3 space today is there is technology available, but there is still a lack of skill set on how to build products out of it. I see many startups fail because they couldn't get the right product. They got the technology right, but now to convert that into product is a different skill set. So what are your views on that, and how can that be filled?
See, there are two aspects to it. If you consider the traditional product journeys, right, products that have been operating in the Web 2.0 space, what happened there was that you have a CTO, you have a CMO, you have a CEO, you have a CEO. 3 or 4 people, they come together, they create a great product, and they grow it together. For example, Zerotha, right? People have experience, they come together, they build something good. So what's missing in Web 3.0 space is that the CTO factor. So other, like, the missing part is that the person who has to contribute in the blockchain space, that's missing. People do not understand blockchain exactly. From 100 blockchain experts in the market, 95%, 95 experts out of 100 do not know what exactly a blockchain will help, right? So it's a young space. People who claim that they have a lot of experience in the industry and try to implement blockchain, we should understand that everyone is experimenting right now. So that is a factor which is restricting the growth of products or realization of products in the real life. It's still remaining as a fantasy. And the second part is finding the right kind of resources. So in blockchain or web3 space right now, resources are at a very shortage, right? That's why we keep saying that opportunities are tremendous. If you learn even 6 months of Solidity programming or blockchain programming, you have a job right away, right? So finding the right resources is very difficult. I personally have worked on uh, almost 12 POCs, proof of concepts, in 1 year that I started as a developer, and out of them only 2 went into production because we didn't have a complete team and the client didn't understood what he wanted to build, and 10 projects they just stopped right away. So that's the major part that's missing.
Right, sure. That's very true. So I think, Harman, we can close the talk today with this. And thank you very much for taking time to deliver this. And it was a very enjoyable and insightful talk. And thank you for being on the show.
Sure, absolutely, it's a pleasure. Thanks Dhruv, thanks Krishna for being here with me.